The insurance company steals my cash value when I die. That's what a client said to me the other day. And this is another example of misinformation being fed by financial celebrities and typical financial planners. What I like to do is the math. And what we're going to do is we are going to do the math on that misconception. And here's what's interesting is technically the insurance company pays you the death benefit. However, when we do the math, I'm going to show you why that is in your best interest. What we're going to do here, this is a typical IBC policy. If you're watching this video and you haven't heard of IBC or the infinite banking concept, that is cool. What I want you to do, I want you to subscribe to my channel right now, and after you watch this video, go back to my channel. I want you to watch the playlist of the infinite banking concept. Okay. And also, since IBC uses boring whole life, okay, you know what? I'm not going to cover IUL, UL, or VUL, because you know what you should be doing with those? Well, you should not be doing those. Now, that's why I have another video that's going to do the math to support that statement. So let's get started. If we look here, the original death benefit is $662.93, okay? And then the cash value at year 10 is $214,256, okay. Okay, now what typical financial planners are saying, the insurance company is only paying you the death benefit. They are stealing your cash value. Well, let's see what the current death benefit is. If we look here, the current death benefit at year 10 is over $1 million. 1030597. Okay. If you've been following my content, you know that I consider myself a recovering CPA. Well, you do not need to be recovering CPA to know that your family would rather have a check for $1 million than a check for $877,000. What I want to do next is let's take it down a little bit further. And let's see here. Okay, so now the cash value at year 20 is over $500,000. 572,660. Okay. Now, this is the original death benefit of 662. So there's a total here of $1.2 million where the insurance company is stealing the 572. But let's take a look at what the insurance company is going to pay your family. At year 20, it's $1.4 million. Okay, what I like you to do is go ask your spouse or text or Snapchat your kids and say, hey, would you rather have 1.2 million when I die or 1.4 million dollars? If you would rather have this amount, what I would like you to do is unsubscribe from my channel, because I am not going to be able to help you. We want to help people who want to help themselves and also help the next generation. This is an example of the misinformation that Wall Street and financial celebrities are doing. And also one other note. When we do an IBC policy, we're using mutual companies. Who owns mutual companies? The policyholders. They owned by you and me. They are not out to steal anything. You are the owners. They're not there to screw you up. And looking at this is actually in your best interest. Okay? Now, I will say each illustration is a little different, and sometimes this difference is almost minimal. Sometimes it's actually in the negative, but it's going to be real small. But the point is, whenever you hear misinformation or some information, even from me, go do your due diligence, go do your math. And this is another reason why you should subscribe and like my channel, because there's going to be even more content just like this, where we take these misconceptions and we do the math. I hope this was helpful. Now go make it a fantastic day.